Good afternoon, everyone. You're all very welcome to our US market open for today, Thursday, the 28th of August. We've had a very busy couple of days. Of course, the Nvidia earnings out better than expected, and obviously something we've been kind of sharing in our community. And of course, recently at 1:30, just in the last hour, we've also had the US GDP figure, the latest print, of which has also come in better than expected. So overall risk sentiment still remains pretty buoyed to the upside. Of course, the jobless claims come in as expected, and of course the core PCE and PCE data prints also come in slightly under expected. So naturally, you would assume that these would be good data prints for the markets, and as I said, particularly off the Nvidia beat as well on the earnings, slightly better than expected. Overall, downside risks does seem to be mitigated as we move into Thursday's US Open, and of course August month end subsequently tomorrow. Now, when we look at aside from the data prints, as we look at kind of market conditions, kind of in line with kind of what we're seeing in the equity markets, S&Ps, there was a little bit of a sharp sell-off last night initially on the open, but we kind of expected that because of course there was a lot of buying into the Nvidia print. So we've kind of had a classic kind of buy the rumor, sell the fact scenario. We've even seen there this week on one position there was 30 million of call options placed, which was obviously favoring a positive outlook on the Nvidia prints. We've had a little bit of a buy the rumor, sell the fact briefly, but over the kind of the last 12-16 hours, we've basically seen futures and price still tilt back into, again, that 6,500 handle on the S&P. So a little bit of a temporary shockwave last night. The NASDAQ is moving higher. The S&Ps is at a critical juncture. And we're also seeing as well the Dow Jones, Wall Street, from last night's sharp little bit of a pullback. Day two has potentially moved back into the all-time highs. So that's again brought about by the fact of the matter that the DXY has kind of rolled over again. So we started to see the DXY late yesterday start to pivot again off of that 98.50 handled 99 print, of something we've kind of talking about yesterday's Zoom, and of course on Tuesday as well in our weekly webinar. And of course, again in the backdrop, the volatility side of things has also remained buoyed underneath that 15 print as well. So you're kind of seeing it today, and even off the back of the pre-markets as we move into 2:30, this was last night's close, we are expecting the VIX to even open lower than that from where we closed last night at around about 14.85 on the VIX. We're expected to open in the low 14. So again, we're seeing volatility down or gapping down. We're seeing the DXY move back lower into the range, continuing this consolidation, of which means there's no real massive reason to be short these equity markets or risk assets at the minute, because we're seeing it in the back end as well, on the likes of the S&P, on the likes of the NAS, and on the likes of the Dow Jones. Now, the European narrative, something we've obviously talked about over the last week or so in particular, it's moved into the lows of the region around 24s. Those bottoms were cemented initially yesterday. They've been confirmed again this morning. That DAX is running pretty much at the low end of that scale, so it'll be interesting to see what happens there in the DAX, given of course we've been in this longer run consolidation. So European maybe slightly off in comparison, the FTSE trailing lower but had aggressive moves into the middle and latter end of last week, so we're kind of getting that cyclical rotation there on that. And then, of course, when we look at the CFD side of things in the crypto markets, we're also seeing Bitcoin up progressively off of that V-shaped bottom that we talked about on Tuesday, that 109, 110 level, critical. Ethereum also off that 4,300 handle. It's at a short-term top around 4,650. And Solana as well, also breaking to new highs, short-term highs, that is, above that kind of 200, 210 range, following that V-shaped movement on Sunday into Monday, followed by that massive correction and push higher on the upside that we've seen over the last 48 hours or so. So naturally, as we move into the US session, broader sentiment is still very much bid to the upside. It's really a case to see how does this VIX open, although it's gapping down into the open. We want to basically see, does it remain on the back foot, or are we going to get a push off of those lows on the VIX to potentially close last night's gap? And you can see this arrow from the close last night to where we're trading at in pre-market. There is a fairly sizable upside gap. So that'll be an interesting narrative. It'll be interesting to see it ultimately whether this S&Ps, these NASDAQ moves actually progress to new highs and sustain and continue pushing higher. We've had rejections on Wednesday. We had initial rejections early this morning, but markets is holding a fair strengthening within today's US Open and into 230 more broadly. So that's really what we're looking at in the back end. In terms of, as I said, the VIX, it's remaining quite stable at those lower bounds, but obviously wanting to see how does that open at 230. And of course, the DXY, right? Every time we've come into this 98.5 print, the DXY rolls back over again, and we've seen it in the equity in the FX markets as well. That euro dollar, it threatened to break through this yellow bottom, and ultimately try and break down. And of course, that DX move lower back in again to test these lower bounds around that 97.5, 98 handle, where it's currently trading slightly above, has allowed that euro dollar to pop up again off of that 1580, 16 handle and back into that mid 1600s. So it'll be interesting to see if today, traditionally speaking, in retail terms, you would actually assume this to be a potential head and shoulders. You've got this drawn out left shoulder, impulsive head, bounce off the neckline and moving higher. So obviously that 17-20 handle would become an area of interest for retail sellers, excuse me. But also in the backdrop, this DXY, every chance we've come down into this yellow region lows in this highlighted zone, we've obviously seen those markets subsequently bounce. So for me, this broader area down here becomes of critical venture into month end tomorrow, and of course on today's US Open. So the next 24-36 hours I think is going to be critical to see whether we get these impulsive moves, we get the S&Ps above that critical 6500 handle, whether we get that NASDAQ pushing back into those all-time highs where it laboured last week, and back into that 24,000 print. NASDAQ's been off in comparison to the S&Ps this week, but given the news on the Nvidia numbers last night and that GDP print today at 130 being higher than expected, beating the forecast and beating the previous number, it kind of alludes to what the administration is saying, that tariffs are up, growth is expected to increase moderately into Q4, and we're certainly seeing it on the data prints as well. And of course that would fine in tune nicely for that narrative for that S&Ps to potentially break up and that NASDAQ to break up. Now yesterday, of course, we had that initial breakdown on the open. We got back into retest it. That was something that we were looking out for, to see, well, would we actually see a little bit of a sell-off in the NAS and the S&Ps off of yesterday's value area when we were breaking down. We got back into it. We closed above it. We got a little bit of tail off, as I said, at the closure last night off of that Nvidia print. You can see this volatility as well. If we remove the value area, you can kind of see that volatility last night. But since then, markets are holding up relatively well. So that 23.6, 625 handle, I think that has to be broken for to see this market elevate to the upside. But as I said, it's all going to be down to the VIX. The VIX is at key threshold lows. Every time we've kind of come into this 14 low handle, we have seen a subsequent bounce. So for me, that'll be kind of really what's worthy of note today, because of course, if we were to see this VIX bottom off of this 14.15, 14.2 threshold, the logical scenario is we potentially see, can it close that gap? And if it does close that gap, that is the narrative to potentially see this S&P fail at 6,500 and actually move back lower into this consolidation region between 64.50 and 65 and actually prevent any sort of meaningful break. And as you can see yourselves on the 30-minute candle prints, you can actually see that the price action is stuck to the value area. So for me, that's where volume is mostly traded at on the session, just around that 64.90. So we're really looking for that expulsion, breakout, and this ascension onwards for the upside. But again, that's going to be contingent on the VIX remaining flatlining, and of course that DXY incrementally moving lower, most likely back into test those levels around that critical support level around 97.5. So we know what we're looking for in terms of this breakout or this ascension or continuation to the upside for the likes of the S&P, the NAS and the Dow critically. But also we're not naive to the fact, or we're not unaware to the fact that the VIX is at obviously key structural lows. The DXY, albeit midpoint, is at the lower end of the midpoint. But we want to see, does it actually incrementally go lower, or again, if it hovers back to where we've been over the last kind of week or two. And that's basically just ranging up and down in this yellow region. And of course, we're seeing it on the euro dollar. As I said, for me, the 117 print, I really wouldn't be evaluating selling opportunities until it gets back into, because of course that was Monday's sell-off zone. So that was Friday's impulsive leg. Monday, the value area before we sold off into Monday evening. That was where the sell-off effectively came from, between that 117, 117.20. So for me, the logical scenario was to see price action hold above today's value area, which is around 1640, and incrementally try and push higher back into that 17 print. Now, whether that happens or not, let's obviously wait and see on the session. In terms of the cable print, we talked about the cable move last night or yesterday. That very, very clear retest of the lows. We kind of drew it out here in yellow. We got that bounce, subsequent move aggressively yesterday. We talked about obviously on Tuesday as well, fairly strong movements, and of course it is finding a little bit of traction again to the upside following that subsequent weakness on the DXY. So for me, it's really a case of seeing how does that bear out. Cable obviously bouncing and holding above 134 is that structural lows, but as you can see this morning on the 30-minute prints, the DXY is again fighting back around that 135. So let's see what happens in the DXY through the course of the session. 4-hour prints obviously shows this labored apex followed by correctional move, and of course if you were to look at last night, gapping down, filling the gap, subsequent move lower into US Open, and a little bit of a bite back on the DXY. So that 98.20 is going to be of short-term interest for FX traders today, to see whether we actually do get that structural pullback, decline, and maybe continuation onto that lower bound. So let's see what happens on the open itself. We're just gone past the open. It's 231. We're seeing a little bit of open volume coming through. So again, that VIX is opening lower. But again, we want to see how does that reflect into 230. If this VIX continues breaking down sub 14, well then the likelihood is this S&P's breaks out, sustains, and incrementally pushes on. Now, I think from my perspective, we talked about it yesterday, that breakdown of value area back into value area, and then obviously closing above it, obviously minusing the volatility on the Nvidia number last night. So I think best course of action on a systematic play like this where the market is trending higher, you obviously want to see it break up to the upside. But in that opening first 15-20 minutes, what we often see is an impulsive leg higher out of the value area, a way to basically trigger longs into the market. But second to that, it often comes back to retest that value area. And for me, that's, as I said, where volume is most accurately trading at. Like you can even see yourself on the open there, the first 2 or 3 minutes, we slightly wicked down. We're breaking out above it. We want to get a little bit of a dynamic break above the value area, above the point of control on the session, and obviously to new highs. And of course, making sure that that is understood. So that's kind of what I'll be looking at in the first half an hour. Short-term break, making sure that sustains, making sure that's kind of holding that 65/40, 64.90, and then obviously looking for that push on again to continue to the upside. And as you've seen yourselves, S&P is grinding and moving very, very intuitively to the upside. Now, the other side of this is the NASDAQ. This is also kind of the more cleaner play that you tend to look for, right? Because of course you've got this consolidation of the yellow area, yesterday's value area matching pretty much today's, by and large between that 23,550 and 23,575. We've got that impulse on the NASDAQ. It'll be interesting now to see, do we get a little bit of a pullback into that 23,575, 23,600, or whether this continues to break on in that initial open. Now you're talking again, that initial open was very, very, very clear. Strong buying at 230 in that first 2-3 minutes. Now often you can snipe it, you can kind of go with the momentum if you have ladders and you're able to see the volume. But if you're looking at candles specifically, we kind of say just be careful of that, because within the candles it doesn't show you the volume, and it doesn't show you where that kind of change in sentiment on those lower time frames comes in. So if you're trading that 1, 2, 3 minute time frame and you're kind of snipe and scalp these markets, then you absolutely need to be looking at the volume side of things, because that can dictate that change in sentiment. Now, as I said, first 4 or 5 minutes, very, very strong initial open, but who's to say after the first 5 minutes we can't get a corrective move back down? Sorry, just bear with me a second, guys. Who's to say we can't get another dynamic move back down into that 23,575, 23,600 handle? So let's see what happens there on the open. We could absolutely see a continuation, and we could see that rip roaring through the 700s. If we break through 700s, then the likelihood is we start to continue pushing higher, at which point then you're really taking out Tuesday's sell-off zone, which is around that 23.7s, and incrementally just pushes on to all-time highs. Now, again, NASDAQ has lagged the S&P over the last kind of couple of days because, of course, the S&P is trading at new all-time highs. So it shows if you were to compare one to the other, the NASDAQ is off by about 1.5%. And we've seen those trade very, very closely. So there's a little bit of an arbitrage opportunity there that if we were to break above kind of that 700s, we could very easily continue grinding higher and play catch up relative to the arbitrage opportunity that we've seen in the S&P over the course of this trading week, and that's of course 2 new all-time highs. So let's see what happens for me in the first 15 to 30 minutes. Obviously want to see sentiment come through. We want to see that kind of sustain. You can even see already the S&Ps, it was wicky on the downside, it's wicky on the upside. So that's of course illustrating the NASDAQ as well. On the 5, you can already see it. It got that initial break. It's already pulling back. So that's exactly what we're talking about here. Aggressive breakout, making sure that obviously sustains. If it doesn't sustain, well, then the natural scenario is to see it come back to this value area, and then obviously making sure it pivots and holds above that, and that again can allow for that deeper run on continuation play into 3 p.m. into the European close at 4:30, and then through the better half of today's US session. So firstly and foremost, sentiment is still there very much to the upside. We're seeing it in the S&Ps, we're seeing it in the NAS. The Dow has become a little bit corrective, but we know that's a little bit of an anomaly compared to the other two, so I'm not massively worried about the Dow in that regard. But we're also seeing that VIX start to move a little bit higher off of those lows. So that's obviously the concern, that the VIX gaps down, it's opening lower, but do we see a little bit of a flush? Do we see a little bit of a closure of that volatility curve from what we've seen last night? So the VIX closes at about 9 p.m, so it wouldn't have factored into consideration the Nvidia numbers that come out, because of course the Nvidia numbers come out after hours, so that's naturally the definition as to why the VIX has gapped lower, because the markets overnight from the close has actually continued to push higher back into relative new all-time highs. So let's see what happens there. If that VIX aggressively starts to point back above, let's say 14.3 into 14.4, the gap closes on, at which point then longs on the S&P, longs on the NASDAQ are, at least in the short term, off the table, because as I said, when the VIX increases in volatility, that is a negative or net negative for risk assets. So that's crypto, that's stocks, that's equities, anything with a risk profile associated to that. So just keep an eye on this into the next half an hour, because as I said, if the VIX continues to move higher, at least in the short term, I would negate any sort of long opportunities. And even that already, you can start to see the S&P. It broke to new highs, just shy of 6,500. As we move 7-8 minutes into the open now, it's stuck to that value area. So it's obviously looking at the volatility curve side of things. It's obviously looking at the ladders. It's looking at the sentiment, but making sure we're dialed into the right side of the bias today. And as I said, even the NASDAQ, aggressive breakout, and it's already undone probably half of that initial opening buying. So really, can it get down lower? That's going to be the golden question, as I said, from 2:38 as things currently stand to 3 o'clock, that first 30-minute print. Now, as I said, the Dow on the other side of things has been kind of a little bit nuanced, because of course we know it's been the laggard. Then of course it had that aggressive move. It got to new all-time highs on Friday. It got the pullback. It's kind of had that step case again, retest of those highs very, very early this morning, just after the London Open on the CFD side of things, around that 43,750. But of course since then it's already 250 points off, back to yesterday's value area. So this yellow area, yesterday's value area at 45.5, and yesterday's wick area here down around 45,450 is probably the juncture of where to look and see, do we see that DXY or that Dow Jones correction ultimately start to falter? Because as I said there yesterday, this was the range into the open with a little bit of a dive off. Then of course we had that aggressive ascension through the highs in the session, continued to move higher into the Nvidia numbers, got a little bit of a correction last night wick, and then of course created that impulse again pre-markets, of which now we're basically seeing that unwind. So let's keep an eye on this area as well today. You've got that, I think that 45.4 to 45.5 range is probably going to be of interest, because of course if you were to look at the yesterday, there was a lot of action down here as well around that 45.400 to 45.450, but we are trading just slightly below yesterday's value area. So keep an eye on this ballpark region. If lows start to come in, that's obviously a good sign, but again, just be mindful of the fact that the VIX gap down. It's trading at the retest level from Monday's lows, which is around about that 14.25, 14.3. So hence the reason why I said a moment ago, if we were to break above 14.4, I think the likelihood is we probably try and come for these gaps that formed over the last 24, 48 hours as well. All right, so that's a quick viewpoint on the equity side of things, the NASDAQ, S&Ps, the dollar as well. The dollar's got back into this yellow level, but let's see what happens there on that as well. Euro dollar has initially broke up this morning, as we discussed earlier in today's Zoom. Is trading above the value area. Would it be surprising we get a retest of the value area? Let's wait and see. That value area in euro dollars around about 1640, 1645. We're currently trading at around about 1660 and formulating short-term lows. But I suspect if the VIX was to pick up into 3 o'clock, you'd actually expect this euro dollar to incrementally break down through the 1660 and immediately come back into this value area down here at 1640. And that's just by evaluating volume and the open profiles judged against the risk profiles in the back end. All right, S&P's holding up relatively well, but again, let's see what happens there. NASDAQ, it's getting wicky. Let's see if it breaks on. If it takes out the 23.7s, the likelihood is it doesn't get the retest. It just probably tries and pushes on. But incrementally as well, that VIX between 14.25 and 14.4 is incrementally key in, as I said, that first 30 minutes of trading. In terms of gold, gold did get back into that 3,400 handle. It's had that kind of steady staircase grind on the shorter time frames, kind of pullback, or extension, break up, pullback, ascension, break up, pullback. Every time it seems to hold above the prior day value area. So here it's holding above Monday's value area yesterday, on Tuesday, and then of course Wednesday we got that breakout holding above Tuesday's value area, and almost a similar structure today, breaking up, holding above today's value area at 33.95, of which we're breaking up above 34.05. So again, taking out this wick would probably insinuate that this gold price is going to go higher. It's broken out through the short-term highs. You'd actually expect it to push on, at which point then 34.25, 34.30, potentially into those low 34.40s becomes a narrative to focus on as this sentiment maybe tries to pick up over the next hour or so. So keep an eye on that one as well. As I said, DXY is going to be interesting. The volatility side of things, interesting, of course. S&Ps, NAS, let's see what happens in that first 30-minute prints. But we've identified all scenarios. We're looking at all of the possibilities. We're looking at the volume side of things. We're looking at the DXY. And of course, the VIX is going to help ascertain short-term viewpoints, but also kind of a rhetoric and a course of action through the course of the session. Now, moving back to the calendar very, very quickly, with pending home sales at 3 p.m, which really wraps up a lot of the activity for today, given, of course, the GDP print numbers being higher, and all of those other numbers pretty much coming in as expected. So we really then move to tomorrow, month end for August. We've got a raft of data prints in Europe with German retail sales, German economic data, unemployment data, should I say, and also CPI data. So Germany, the DAX, the euro is going to be pivotal tomorrow. Keep an eye on that if you're, let's say, a swing trader or you're carrying trades through into potentially month end tomorrow. Keep an eye on that. And then, of course, in the back end, as we move into the US session tomorrow, 1:30 into 3 is also going to be critical, because, of course, we've got Michigan Consumer Sentiment Index, we've got PMIs, we've got core PCE data coming out on the price index as well. So those are going to be interesting narratives to see whether we get a little bit of a correction or whether we get these markets actually fluid and positive into month end. Now, you're looking at the month end perspective. What we're going to do here is, just before we finish, just to give you some perspective on the markets over the last number of weeks, just so you can visualize this. And I'm just going to turn it into a blank screen. This is the S&Ps on the monthly chart over the last few weeks. So of course that April move into that correction, May proved to be vital. June, July and August have all kicked off with strengthening. So every month we're seeing a new all-time high in these markets, and as well with the GDP number holding up. Unemployment levels is obviously laboured. We've seen Powell obviously talk about that more recently, expecting that Fed cut coming in September. Will that allow these equity markets to really push on through 6,500s and incrementally then up through the gears towards 7,000? So that's going to be an interesting narrative and a pivotal question to look at into the Fed rate cut meeting, or Fed interest rate meeting, on the 17th, 18th of September. And of course then posing that fort into year end as well as we move into Q4 next month. So a lot to look out for on the higher time frame perspective. Short-term perspective is also very, very interesting, of which we've kind of talked about. So from my perspective today, as I said, looking at the risk, looking at the volatility side of things very, very clearly. And then, of course, really kind of garnering a viewpoint of, as I said, the likes of the VIX and the DXY into 3 o'clock and through the course of the session as well. So we're nicely poised. All right. So guys, have a great day trading, and ladies, as always, trade safe. Risk management, it has to be integral with these types of markets, particularly when you have a lot of moving parts. You've got volatility curve, you've got end of August summer markets into September, you've got data prints coming out this week with some important earnings, and of course economic data prints as well, and naturally as well, tomorrow being month end, that can cause a little bit of a stir as well. So just trade safe over the next 24-48 hours as well. All right, have a great session everyone. Trade safe. Thank you.